The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. Well, this is my last day in the city of brotherly love, heading back to the old it's the old townhouse. It's not a ranch. Heading back to Tucson to the nice warm weather we're having there. 112 today. It's broke records that we haven't ever seen before in Tucson. We hit 117. That is so hot, but it's a dry heat. Anyway, it's going to be back to normal today. It's going to be down about 105. 105 for us is like a balmy 90 degrees anyplace else, because we don't have any humidity, which is really nice. Let's take a look at this gold market. We were looking at this just the other day when we were having the 61% retracement last Friday. Since that time, we've started to sell off. As you can see, we have a potential here for a 1254, 1255 per ounce level on this ABCD pattern, which would be very, very important, because you can see that's where it broke out of back on June the 3rd. That would be a 61% retracement of that move, and also an ABCD pattern coming at the same time. We're having some really good swings in gold here, so you don't have anything to worry about as far as having a little bit action. Yeah, it's like an oven. You're right, it is pretty hot. There's no question about it. Let's just take a look here and look at gold a little closer. All I did today was I follow gold. I like to trade it quite a bit. But as you can see here, what's happened since that time when we hit that 61% retracement a few days ago, we came back and then we rallied up to another high yesterday at 1296, which made that a 135 declining tops pattern. That was a pattern that was made famous by Roy Longstreet and his son Bill. Those are the high would be 1, the secondary high would be 3, and the third high would be 5. I don't know why they named it 135. I mean, I used to talk to him all the time. I just thought they gave it the name of 135. I don't know why they didn't call it 123, but that's what they called it. And I put it in my book, my first book, Astro Cycles: A Trader's Viewpoint, because it was such a really good pattern, because it forces you to trade with the trend. And all I did was to show the long streets, how the Fibonacci numbers fit in nicely with this pattern, because if the 3 is a 618 and the 5 is a 618, you certainly have a really good spot, for the market to go lower. Now, the low that we hit so far today in gold, 1272, actually 1271.10, I believe, was the low. That was a 1.618 expansion of yesterday's range. It was also a 1.27 expansion of the range between the 13th and the 17th. And it's also a 38% retracement of the low from June 3rd. This could be a potential major low in the gold market. However, that 1255 looks very, very compelling to me, because of the fact that it is a much larger correction, which we should be seeing at this particular time. Now, the $64 question in gold is going to be this. As you remember, a few weeks ago, let's try that, just a few days ago, we were looking at the gold market here as for a potential a 3-drive pattern there. You can see the drive that we had in March. Then we had another new high in May, and then we had another new high in June. And you'll notice that the time frame between those was spot on equal. And so this is, in other words, the highs are perfectly equal, and that's what you'd be looking for. Now, you'll see we've been down to that 382 retracement today of that whole move. So this could be, if it's really bullish in gold, look out, because we've been down 4 days. We're right at the 382 retracement at 1272, and if that holds and we get above 1288 or 1290 today, look out. This thing could really go. So pay close attention if you want to be bullish the gold, because this would be the spot where you pays your money and takes your choice. So this is interesting, because if we go below 1272, as you can see, that sets up to 1255, and then we'll notice what's happened. But the last time we had these major highs, the market went down about 10 days. On the first one, it was down about 2 weeks on the or 3 weeks on the second one. So this one, I'm not sure what's going to happen, but this is the pattern that I'm looking at. Remember, these are just smaller patterns within a larger structure, is really it is. And it's only, these are only probabilities, folks. That's all it really is. You're right, Gator. That was a real nice ABCD down there, and so far it's holding pretty nicely. But as long as it stays above 1272, the gold's got a real chance in here, and silver's been acting pretty good. It's actually been holding up very well. Now, everybody in the whole world is talking about the Brexit, and I wanted to bring this up here today to show you this move here in the British pound that we've looked about, and everybody's talking about it. Now, what's happened today is that the British pound last night, about 4 hours ago, it went up and it took out the highs of early May at 147.72. It made a high of 147.76 and then sold off 100 points. Folks, when a market makes a new high like that and it doesn't go charging through, it's got, you have to ask yourself what's going on here. So who knows? If the British vote comes out that they're going to leave, which what I hear from the people that I know there, but the people that I know there, I think their votes really don't count, because they're in the area of all self-employed people, and they don't want to have anything to do with the government running anything. And so that's my guess. What do I know about politics? Let's forget this. Anyway, it did go up above that high. So there's a lot of resistance. It's at 147.70, and that's the main thing that we want to be looking at. The $64 question, it's not the pound that's in this thing. The people keep forgetting that the pound is not what's happening, because the euro is the real problem here, folks, because the euro is where, they're the big loser here, not the pound. It would be the euro. And if we take a look at this euro on the long-term chart here, this is going back about 10 years, you'll see that we still have a big objective down here at around 99. And we've been going sideways now for well over, a year and a half now. And we do have a possibility that we could make an ABCD move about 500 points higher up at that 119.19 area. That's a possibility of that. Maybe if they stay in the euro, this is going to be the thing that gives the euro a boost. But this is still a downtrend, folks. We've been making lower highs since 2008. We made one in 2009, 2010, 2014, 2015. So this is a major downtrend. So I don't see this turning into a big bull market from this level by any stretch of the imagination. But we're at an area now where we're going to have some, real interesting things with this vote coming up in just 2 days. That'll be very interesting. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've put up a chart of the S&P E-mini, and as you can see, we made that ABCD pattern up there at that 1289.50. We did get up to 21, oh brother, 2089.5 was the exact number. We get to 2092, and then we sold off. Then we went back up. We got all the way down to 2072. We rallied up to the 61% retracement at 85, and now we're heading lower. This market is not acting as bullish as it should, given the fact that they've milked this Brexit thing, I think, about as far as they're going to milk it. So the whole thing that you look at, folks, is these European stocks and the Asian stocks and our stocks. They look weak. And the reason why we've had these lower highs, now you've had the S&P look pretty good, you've had the Dow look pretty good, but if you look at the New York Stock Exchange Index, and in particularly, the NASDAQ, which had been the big leader of the pack this whole time, it's looking very, very weak. And so this is you add this together and it tells you that, possibly, we could be looking at something a little bit more ominous than people, might be thinking. I don't know if it has anything to do with the Brexit stuff or not. I frankly don't know. And I don't care, because I really don't try to listen to the news. The stuff on the politics, just I just don't know how people can go into that business itself. I know it's a big business, but boy, oh boy, it's you talk about a cutthroat business. It makes the jewelry business look like something out of Mary Poppins. Okay, that's the main thing that I wanted to get across the chest, that it doesn't look bullish in these stocks, particularly the Japanese stock market, folks. That is the one that is the most bearish of any of the stock markets that we have out here. This market has just got all of the earmarks of one of the major breaks coming, and it should be pretty nasty. And the reason why I say that is, if we look at this thing on the Nikkei, and I've spelled it wrong here, it's N-E-K-K-I-E. I'm not the smartest knife in the drawer when it comes to spelling. I'm from Indiana, so we didn't worry about the cipher. We worried more about ciphering than we did about the letters. Anyway, you'll notice it had these gap downs, and we have had a little bit of a rally this week, never even came close to that high of last week. That was basically a Brexit vote rally, I think. I don't know, but this thing has really got an earmark of another 30% down in the stock market. And when you think about the Japanese government has been buying the stocks in Japan, and the question is, who are they selling it to? And therein lies the rub, because the sellers have been much stronger here because the prices are going down. So this is an incredibly bearish chart. No way you can say that it's bullish. You had that beautiful ABCD pattern back there about 10 weeks ago, right at the 382 level. That was at 17,700, and now we've dropped 2,000 points in a matter of just 5 or 6 weeks. So it's telling you that this is a tremendously bearish chart pattern, longer term, and that's what this is. It's longer term. There's nothing anything ecstatic about that. It's just what it's looking at. Now, we had a big move in the London markets and everything. I haven't updated this chart yet, but I want to talk about it because that's where we were on Friday. We went down to that 61% retracement. Then we've had a really big move because of the Brexit vote. Supposedly what the Brexit vote is going to be, and then we'll see what happens, with that. So, okay, we had a question. Someone asked me a question about the Japanese yen futures or the Japanese market. What I'm going to do is I'll post up a chart that I use. This is the long-term weekly in the yen. As you can see, we broke down below that 106 level, which was a very, very important support, and now it looks to me like we're heading down to either the 102 level, 102.90 level, which is where the old breakout occurred. But this market still has pressure to the downside. Right now we're trading the 104 and change level, but to me, we had something really significant happen, last year when we got to that 125. But remember, this market at one time was trading at 360. So we've had one heck of a move, from 360 down to 75, up to 125, and now backing off. So this could be a really big long-term play if it can hold these levels around 102, because breaking below 102 would set up the 61% retracement, which would be down about the 95 level. Now, these are really big things here. So I've had a request to do the cattle. I haven't had any chance to do that. I have not been interested in the cattle market. That's no excuse, but I will try to do that a little bit later in the show during the break. I'll try to put up a cattle. I don't even do feeder cattle, Mr. P. So I wish I I would tell you why, but Mr. O'Brien would be mad at me. Okay. Anyway, let's not worry about the cattle market. Someone's asked I eat meat 3 times a day, Duffy. Fact is, one of my favorite things, one of the best meats in the world is bacon. If you ever go to a barbecue where they're actually doing the pig, and if they'll slit the belly of the pig where you get the pork belly, and then put that pork belly on and cook it like a steak. Oh, wow. That is really good stuff. Let me tell you, that is really good stuff. I went to a Howard Hughes cookout once back in Las Vegas back in the 70s when I was at Drexel. And boy, they had a couple of pigs they were cooking there. And the chef came up, and I was looking, and he said, "You like meat?" And I said, "Yeah." He said, "Try this." And he went up and took his knife and slit the belly of the hog, and then took this piece of pork belly and trimmed off the fat and then cooked it. Boy, it was really good. And that's probably why I'm in the category of being a little rotund. Okay. I'm not going to worry about the markets for the grains, because I'm going to have Rich Anderson on next week, and we're going to go over these pretty good. But remember, the grains have a tendency to rally early in the season, and then around the 4th of July, they have a tendency to, to make a high for the year. We've seen this happen many times. Last year, it did it exactly. If you remember, we had that big Gartley pattern in beans where they went from, they rallied about $1.50 a bushel, and then proceeded to go down for the rest of the year. So the weather has been absolutely spectacular for a bean move. I mean, we had a big high pressure center, over the United States. Back in the old days, beans would have been up 3 or 4 limits. with weather like this. But the fact that we have other countries that supply some of this stuff, presumably, Argentina and Brazil, that really helps alleviate some of the problems with crop scares, which is pretty good. Okay, a question from someone was about the silver. I wanted to bring it up and show you what's been going on with silver over the past few weeks here. Not much, just the usual, doing the same thing that it always does. If you'll notice these little red boxes, you'll see that these are the numbers that it tends to go through, and that you can see that 1760 level in silver has caused some major areas of resistance. Okay, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I was able to pull up a chart of October cattle. And as you can see, this is not feeder cattle, and feeder cattle have a lot less volume than the live cattle. But you can see this chart on the live cattle. It has a beautiful butterfly pattern coming in here at about 107, 108, which is about 3 cents from where we are right now. That would also be a multiple ABCD move, and it would also be a 1.618 expansion of the move from December through January. So this 108 level in October cattle should be really interesting to watch. That'll be a very nice pattern forming. So keep an eye on that. I don't know what the number would be for feeder cattle because, frankly, I haven't traded feeder cattle in the last 35 years, so I don't really have an interest, which is the understatement of the year. But cattle I do watch, and it looks like we're getting ready to come down to this level here of around 108. We're trading at 110.65 right now, so that's what we're keeping an eye on at that particular point, and we'll see, where it goes, from that level. We've had, I'll tell you, folks, I had more static from not static. What am I talking about? I had some more nice input about how wrong I am about this long-term projection of interest rates, where I think we're at a major high on interest rates. It's just been a really big, just a lot of things telling me that this is what's going on with this. I don't know. I just look at the patterns, and this 3-drive pattern is one of the most powerful of all patterns that we have. And, it works, not all the time, but, when you got everything lined up, you have to pay attention to it, So that's the main thing. Now, we're going to take a look here at this. This is the German bond, and as you can see, it's already backed off. And this is a lot of money in the German bond. It's not like ours. It trades at a different value. But as you can see, we made the big butterfly pattern exactly at the 1.618 level. And we took it out 2 days later by 2 pips, and then it just, totally reversed. And we're doing the same thing now in our Treasury bond. It's doing the same thing. It's rolling over. But all of these, if you look, I'm just looking at the patterns, folks, and I think it's important enough to take a look at it. But this chart, the next chart is the one from our good friend Jim Bartolioni, and this is the one on the utilities, because this goes back 1942. I was just a little 2-year-old shaver at that time. I didn't put my first trade on until I was 3. And I went long Pampers diapers. Nope, that wasn't true, because Pampers didn't come out until 67. My kids were one of the test groups for Pampers. Okay, not that you need to know that. Okay, but you'll see the drive 1, the value in drive 1 going back to 1942. You see drive 2 that took us into 2007. And now we're at drive 3 that we've already completed up here. You can't make this stuff up, folks. I mean, this is some kind of a geometric pattern that certainly must mean something. What it means, I'm not sure, but it looks like there's a major top being formed in this puppy. That's the only way I can look at it. So we'll see what's happening. If we take a look, and I'm just going to reiterate, what I'm seeing. I can't do anything more than that. But if we take a look at the Treasury notes couldn't even take out the high from 2012, even though the interest rates went lower. That's because of the way they structure their contracts. But you'll notice that head and shoulders pattern is still intact, and the notes still look by far that they want to head lower. So that means if notes go lower, that means higher interest rates. That's what I said. That could be the canary in the woodpile that these folks at the Federal Reserve have done everything they can to extend the business cycle with no recessions, and they've done a good job, but they did it by increasing their balance sheet, to $4.5 trillion. I mean, it basically looks like the tulip bulb mania on their balance sheet when you see the chart of it, and that is not a good sign, folks. These things never end well, especially when you're looking at something that is as important as what the Federal Reserve does, because they do our money supply. And I always mention to everybody, take a bill out of your pocket, and you realize that it's a Federal Reserve note, through the U.S. Treasury. So the Federal Reserve takes care of our money supply. They print these notes through the U.S. Treasury, and then they sell them back, to the government. Okay, then the government turns around and supposedly uses the money to fund whatever things they need. Okay, but this is what it is, and it's not a good thing. I'm getting into the fundamentals. I don't want to get into fundamentals. That's all I can say. All right, the next one I wanted to show you here was the, hold on a second, was the New York, that's not right. This is the Dow Jones. This is the Dow Jones. Yesterday, we got to the 61% retracement in the S&P. We made it almost to the 786. We missed it by about 40 points in the Dow E-mini. So the S&P was much, much weaker than the Dow for the first time in quite some time. So that's another reason to make us think that this thing is maybe taking the Brexit thing a little bit too much of a to the one side or the other. There should be some support here in the S&P at the 2076 level. We've hit 2076.50 so far this morning. If we break below that, then we're looking at something much more sinister to the downside. But as we look at the currencies, the euro has sold off well over 100 pips in the last 3.5 hours. We got up to the 61% retracement of the previous day's high at 113.50, and now we're trading at 112.64. So some of this Brexit stuff seems to be wearing off, but how much will remain to be seen. We've had a question about the crude oil. Yesterday, I mentioned that I thought crude oil would be a good short at 49.50, and it got to 49.42 was the high. And people ask, what do you do in that case? Well, if it misses it, what I use is the declining 4-year, 2.5-day, 200-day, and 300-day oscillators. And then I divide that by 6, and then if it doesn't come up to a different number, I just leave the order in. And so I didn't get filled. However, what I did do, because someone asked about it, I went in and recalculated it, and the actual number on that 61% retracement on the crude oil was not 49.50, it was 49.44. So it missed it by 2 pips and not 8 pips. But there's nothing you can do about that unless you shade it by 5 or 10 pips, and then you got filled. If you wait for the right number like I did, you're sitting there in the the bridesmaid's chamber, and you don't have a wedding going on. So sometimes you win, sometimes you lose. You pays your money and you takes your choice. All right, we've had a question in the den about the silver market. I think silver is in the same situation as gold. If we can hold these lows, we got a chance to go higher, especially the gold. 1272 was 382. We all like 382.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks. I'm going to talk just a little bit about trading psychology a little bit. I think it's probably 85% of what we do here. These numbers and patterns and stuff we look at, that's only the 15% of what goes on. What you have to do is how you handle it when it gets to that point. You have to be able to take your responsibility for putting the trade on and put your stop in and know that you're dealing in probabilities. And you have to have a belief system that really tells you that you know what you're doing. You might not know what you're doing all the time, but you know what you're doing some of the time. And even if it's just 50%, you can still make a great deal of money. One of the best traders that I know is only right about 30% of the time, but when he's right big time. So, it's really an interesting situation here when you're thinking about stuff like this, because the mental part of trading is by far the most important. Someone's asked a question about which books had changed my life as much as anything. Of course, one of my first books that got me started was Think and Grow Rich by Napoleon Hill. And I was fortunate enough to be able to have dinner with him once, and also with his friend W. Clement Stone. Several of us from the University of Indiana went there to look at it. The Gartley book is by far one of the greatest books ever, but that's a book it's 700 pages, but the only pages that counted for me were pages 200 to 250. But there's one book that doesn't get as much play as it used to, and that is the Reminiscences, whatever that word is, of a Stock Operator by Edwin Lefevre, which is purportedly the work of Jesse Livermore. And basically it was, of course, that was his pen name. And that is a fabulous book because it talks about, the real intricacies of trading, about all the kind of stuff that, you don't really think about, reading the tape and stuff like that. And I frankly have read that book, Gator. I've read the book 50 times. And I'm not kidding you, I've read it 50 times. And I used to remember the passages out of it, but it's just really, it's really a fabulous book to go through of what trading was like, and, what a successful man he was. Now, Livermore, they said that he died bankrupt. He did not die bankrupt. He was not trading anymore. He had fallen in love. this is not necessary to go through this. Anyway, that is a fabulous book. If you don't have that book, Reminiscences of a Stock Operator by Edwin Lefevre, you should have that in your book, in your library. That is one of the best, because it's really a tremendous book about trading, which I think is very, very good. Those are some of my more important books that I've read. The books by Bryce Gilmore, to say the least, were a big change for me, because that explained the geometry of the market better than anything I had ever seen. And those books, those were in the early 90s. That was a big transition for me when I started to see how some of these things, started to fit together. And so that's another one that's real interesting, to look at. One of the questions that someone's asked me is about Elliott Wave. Folks, I'm not an Elliott Wave person. I know Elliott Wave exists. When Charles Collins came out in 1938 to promote Ralph Elliott, he was able to promote him, I think, for 6 or 7 years, and then Elliott passed away, I believe. And I have the same birthday as Ralph Elliott. Hard to believe, but it is. And I just had trouble counting the waves. And every time I'm around these guys like Bryce Gilmore and Bob Miner and some of these other fellows that are really, write the books about this stuff, I'm amazed at how they'll argue about whether it's a 2 or a 3 or a 5 or a 1. I'm just sitting there. I says, well, there's got to be something in here to make a buck on, and that's really, what I look at. So I do believe the Elliott wave is certainly valuable. It's just that I don't do wave counting. I'm just not very good. In fact, I like the way that Basil Chapman does his counting far better than the Elliott wave, because you don't get a lot of misinterpretations. It's quite simple to see how the waves move. So that's the way I look at it. Anyway, that's what it feels like from looking at the Elliott wave concept. And believe me, I was looking at this long before Prechter was ever doing it. This was back in 1970 and 71 when my mentor, John Hill, first showed me the papers by Elliott. And I saw the Fibonacci numbers, and that's what I was, interested in, was the numbers. And remember, Elliott did not use any of the numbers of the square roots of numbers. He did not use 1.27. He did not use 1.618. And he used 1.61. He did not use the reciprocal, the square roots of the numbers. In other words, the square root of 1.618 is 1.27. The square root of 1.27 is 786. He didn't use those, and you really can't describe what a market's doing until you're able to see those things working. So that's the key, to be watching. Anyway, those are the main things that I'm keeping an eye on with these markets, and that's the main thing. We're coming down to a major support spot right now in the euro as we speak at this 112.50 level. Well, it's actually 112.40, and we're at 112.54 right now. Watch that level very closely, folks, because that's a beautiful ABCD pattern in an up market, and if it's going to hold, it's going to have to hold right at that level. So keep a close eye on that level in the thing. The 2076 so far in the S&P has held minorly, but if you go below 2074, you're looking at a lot lower prices into the 2060 areas. The thing is, the market thus far has not had a big move given all the bullish scenario that we had. Stop and think, what they've tried to tell us about this vote. And remember, that was just a poll that came out. That wasn't the vote. Heaven help us if we don't hit this vote the way they think it's going to be. This is going to be interesting. But frankly, I think it's already done deal, just like they did with the Greeks. It's more cannon fodder that they use on us. And that's pretty much, what you're looking at. As far as the gold market, the 1272 is extremely important. Below that, you're looking at the 1255 level, and we could easily, with this Brexit vote, we could easily get some moves that are going to just scare the pants off some people in the markets on those days. But if we keep watching the patterns and keep our cards close to the vest, I think we'll be able to pick out a few nice winners in here. Keep an eye on the bond bonds, folks, because if we get a nice rally in the bonds up around this 169.20 area, that would really be, that's about a point and a half from where we are right now. I would really be highly recommend a short sale at that level with a stop above those old highs, because these major patterns have come in. We backed off 3.5 handles. Oh, actually backed off 4 handles in the bonds. And that's the biggest group we had. Now the 38% move back in the bonds takes you to 169. That's only less than a point from where we are right now. So that's another area to keep an eye on. So 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I want to make a correction on that euro. It's not 112.44 is the projected low. It's 112.34. It's a 10 pips off, but I wanted to make that distinction because I believe in these numbers so strongly that the exact 61% retracement off the low on the 16th comes in at 112.28. So that's the bottom line. So they don't always hit exactly, but when they do, it's always nice to see. And the question is, what do you do when they're off by a few pips? I don't know the answer to that. Sometimes if you just you want to be short or want to be long, you just have to go in. But if you stop and think, like with the crude oil, you're talking about a contract that's $49,000, and you come within $20. I mean, boy, that percentage-wise, that's a very, very small difference. But that's what trading is all about. One of the things that I think Basil and also Steve Rhodes points out is by using that exponential 8-day moving average or 8-period moving average, that can also trigger you into the trade. You might get in at a little bit higher or lower price, but at least that will trigger you into the position, and that's what the whole ball game's all about. Watch this level in the S&P, folks, because if we go below this 2076 level, we're looking at something that's going to be a little bit more to the downside. That's the way that it looks to me. And also the gold. The gold is really important, that if we go below 1272, and we've only rallied about $5, $6 off the bottom, if we go below 1272, you're looking at that 1255 to 1240 area, which is quite a bit lower, and then we'll look at that one also. So with this Brexit thing coming in, they use this as a reasoning for why the markets do what they do, but frankly, they're all going to be the same anyway, no matter what happens. The world's not going to come to the end if they either stay in the Britain or they leave. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.